Put out a note to your clients a few days ago saying that the bear market is still in its infancy. So it doesn't sound like you're a buyer here. Why?
Yeah, good afternoon, Sarah. So it looks to us like this is a large bear market rally. I mean, it's very normal that the deeper the decline, we know how deep the decline was, 34% peak to trough in 23 days, the higher the bounce, and often the deeper the retest. And that's been proven over and over again historically. So, at 2750 here, we are bumping up against some key resistance levels. And based on where we think earnings are going to go this year, markets still look like they need to reset those earnings expectations possibly lower. So we would kind of fade this rally, be a seller into this rally of particularly Mike made a good point about the leaders this week have all been the stocks that have trailed for the last 12 months in performance. Quite frankly, the ones that were leading us for the last 12 months are woefully behind by almost 12% this week. So you're getting a lot of the junkier sectors rallying here.
Omar, your take on the same question. Is this bounce happened too fast and too hard?
Well, it is very hard to describe, the bear market. So this was the fastest bear market that we got into in history, and therefore it's very hard to address, how much of the bear market is over. But what we do know is that because of what we know central banks are doing and what we know what the governments are doing, that there is a significant amount of support for this bear market. Unlike other bear markets, this is the one where we just heard from the Fed in the minutes today that they will do everything in their power to be able to support this. So while I agree that clearly the market is driven by sentiment and there is no fundamentals or economic data that is fully priced into this, there is a significant amount of support provided by liquidity from the central banks and from the stimulus fiscally.
Darrell, just to play devil's advocate, even the fact that Dr. Fauci, who's been very cautious and very open about, how painful this is going to be for our country, is talking about an opening of the economy. The fact that Governor Cuomo is talking about it, yes, they're tentative and they're early and the numbers are still devastating. But the fact that the conversation has moved there, doesn't that give you optimism? Doesn't that change the trajectory?
Yeah, I mean, let me be clear, Sarah. I mean, it is very optimistic that we may be opening the economy hopefully sooner rather than later and re-hitting the start button. I mean, if you add up the optimism, it's better coronavirus cases, it's hope for this OPEC plus deal coming later this week or early next, it's more stimulus out of Washington, it's more clarity on elections. So the headlines this week have been overwhelmingly positive, and so it doesn't surprise me in the market's reaction. That said, discussing a plan to reopen the markets still is a long way from A, reopening the economy, and B, repairing what's probably going to be almost irreparable harm to labor markets, to consumer confidence, to ultimately spending. We're not going to return or resume to the level of economic activity that we were at in January or February, or the level of confidence or any of that such. So I think we have to price that into the markets here. Not trying to be too bearish. We're trying to help our clients understand this is not a time probably to chase this straight back up close to the highs of where we were 30 days or so ago.
Omar, if the economy does manage to open up relatively soon and we don't then see any kind of very worrying second wave of this disease, with all of the stimulus that we've seen, would that warrant going above the earlier in the year record highs fairly quickly?
Well, I would actually say that the key part of your question is the word quickly. I do not think that the V-shaped recovery that people have talked about or that talk in the past, it is something that is potentially feasible. And a lot of that is related to the fact that, reopening an economy of our size is not going to be that quick. Even with everything that is being already portrayed as possibilities, first we need to solve the health crisis, and the health solution is something that is not there here. Before we get to that point, even with everything that is put in the table, it's going to take a while for things to start getting restarted and to start getting to the right place. I do think, however, as I said, the big support that we get for the stimulus and liquidity is something that will provide a good path to make sure that the volatility is a little tame. I would actually say that the key component for people, and we tell our clients, is to continue to watch the credit market, because that's the area that will probably give an indication of whether or not things will start getting a little more closer to where we are. I do think, however, because of the unknowns of the impact of the crisis and the length of it, it is going to be very hard to just anticipate how this will work.